The world now is really scared that inflation is stickier than we thought, that rates need to go higher than we thought.
They're raising rates and reducing the size of their balance sheet in rather dramatic fashion into an inverted yield curve. And that is going to sow the seeds for a recession if we're not already in one.
Do you think we are going into a recession?
I think so, but again, these numbers don't portend very well.
This is a disaster quarter. Disaster pre-announcement from FedEx.
So far, the United States has been relatively insulated from the worst of the economic turmoil, but now there has been growing concern about the state of the global economy and recession. Some experts have even warned of a potential global recession. Even the World Bank has made statements regarding the global recession. Recently, in an interview with CNBC, we could see Jim Cramer kind of pushing if there is a global recession or not. To which Raj Subramaniam, the FedEx CEO, stated that the world economy is facing the threat of recession after his company missed the first quarter's revenue and earnings targets. In this video, Chamath and David Sachs discussed the news flow as well as the rising Fed states. So stay tuned till the end as we explore the reasons if there's a global recession underway and what these news flows could mean for the US market and economy. Before jumping into the video, be sure to subscribe to my channel for more crypto market and economy related videos.
I think this is a little bit of a head scratcher. This is a new CEO, so I think the game theory on this is that it made a lot of sense for him to reset expectations. I get that, and I think that that's a reasonably smart thing to do when you're incoming, leader of a very complicated organization that really is at the end of the bullwhip, so to speak, on consumer demand. The problem is there's just so much conflicting data. Retail sales was pretty reasonable. China actually looked a little bit stronger than people expected just this past week on some data that came out there. It looks like Europe is going to really draw a hard line and make sure that they spend whatever it takes to have enough energy so that their productivity doesn't fall off a cliff. All of those signals would say that, we're not at the precipice of this kind of like cratering of demand. And then you have Powell basically saying, yeah, we're going to go another 75 and, we're going to take rates to probably somewhere between 4 and 5%.
According to Deutsche Bank, the Fed may have to raise its policy rate to 5% to get a grip on inflation. With inflation ticking higher, Chamath also believes that the Fed is likely to keep interest rates rising in their upcoming meets. According to him, they will most likely take rates to somewhere between 4 and 5%. Still, he's not really into the camp of having a global recession right now. But his buddy David Sachs has a slightly different tune. Let's hear him out.
I think what's going on here is that whatever the issues of FedEx, and no matter how overstated these warnings may have been, I think they're directionally correct. He's saying that the world's headed for a global recession, and directionally he appears to be right. I mean, things look really grim. We just had this inflation report that was much worse than what people were expecting. Inflation was supposed to go down to 8.0%. And actually, it was 8.3%. That's why the stock market cratered a few days ago. It was like the worst day in the stock market, I think maybe all year, or certainly since June. We're almost towards the June lows. Now, this FedEx executive is saying we're headed for a global recession. So it seems to me that the economic news is just pretty grim here. And we're in stagflation. The Fed has to keep raising interest rates at the same time that we have persistent high chronic inflation. And you have to wonder, I tweeted a few months ago that the White House economic advisor, Brian Deese, he said that in this interview with CNN, that the Biden administration was willing to endure a global recession in order to keep Russia from controlling the Donbass region in Ukraine. Well, mission accomplished. It looks like it's getting its wish. The administration's made some progress in the Donbass, but we are also having a global recession.
David highlights that the condition of the economy is not really healthy with inflation worsening month by month, and agrees with the FedEx statement of being in a global recession. Let's get into the next clip to see if Chamath agrees with this or not.
I don't think we're in a recession yet. Retail sales is still quite strong. There's just a lot of signals that tell us that people are still consuming a lot of things, and
jobs
that
too.
That GDP is pretty reasonable, and that jobs and wages, are pretty much, quite full. I think that rates are going to go somewhere between 4.5% to 5%. I think Stan Druckenmiller is right. And I've said this, I don't know, now ad nauseum, so I'll just keep saying it. But I think everybody has consistently been wrong And
About
they have
what?
wanted inflation to be a transitory phenomenon that goes away, and they've been consistently wrong. Even in our group chat, we see these forecasts. They've been utterly consistently wrong. So rates are going to go higher than people expect. It'll stay around longer than people want. This will have an impact to the economy. That impact in 2024, 2025 will not be that great. So that's one thing. And I think that this thing is going to drag on for a really long time. So I think, Sachs, you are right that we will be there because you can only bring rates up so high until you break things. What do you guys think is going on there?
Chamath doesn't completely agree with David on the fact that we're facing a recession right now, but Chamath believes that the matter of global recession is going to drag on in the upcoming years, if not now. It's no secret that the global economy has been in a state of flux for the past few days, with of course the inflation and everything. But there are some pretty good signals that say the opposite. One of those things is people are still consuming a lot of goods and services. The most obvious indicator of this is the retail sector. U.S. retail sales unexpectedly rebounded in August as Americans ramped up purchases of motor vehicles and dined out more. Consumer spending, however, is likely to remain supported by persistent strength in the labor market. Another significant sign that people are still consuming a lot is the fact that credit card debt is still rising. This is an indication that people are using credit to finance their purchases to meet inflation. So does that mean global recession is not here yet, or what? Let's get into the next clip, but before that, be sure to like and share.
There's a tweet by, I think, a Charles Schwab analyst today about that issue of wages, and she was tweeting, I'll have to find it, that for the second year in a row, we now have, because of inflation, we now have real wage decreases. So you may be right about like where things stand today, but this is about the trajectory right now of the economy, and the trajectory is not good. Inflation is not coming down as fast as people were anticipating. It's worse than expected. You have the situation in Ukraine where, listen, we can all cheer on the Ukrainians for this counteroffensive that appeared to be successful, but we are playing with fire over there. I mean, I don't recall a time during the Cold War where we did anything remotely this risky.
David agrees with Chamath, saying that maybe we're not in a recession at the time, but the economy is literally playing over fire and could worsen ahead. David argues that currently inflation is not coming down and could be worse than expected. This is causing a lot of anxiety for businesses and consumers alike. So what does this mean for the global economy, and how does it affect the markets? Let's get into the clip to see what Chamath has to say on this matter.
Right now, we're in a situation where the markets are looking for a direction. Retail seems to think that direction should be up. Hedge funds don't have an opinion, are saying, we're just going to wait this thing out.
Okay.
Meanwhile, the data, at best, is a question mark. And I think that's the tension we have right now in the stock market, is the psychological desire is for this thing to be over. Meaning, I think people want to hear inflation is done, we're starting the recession, give us 3 or 4 quarters, we'll be out, here's a steady state interest rate, let's go tech.
There's tension in the market for sure. Crypto markets are literally in a bloodbath due to macroeconomic conditions globally, with Bitcoin price falling as low as $18,000. Chamath suggests we all hope for the best and prepare for the worst. So after all this fall, is cryptocurrency still a good investment? Are we in a global recession, and can the market go down even more? Let me know your thoughts in the comments below. And for more videos like this, don't forget to hit that subscribe button. I'll see you all in my next video. Adios and thanks for watching.